Hey everyone, today we're going to talk about a really powerful way to look at the gold market. Heck, any market really. It's called top-down analysis, and trust me, it's going to bring so much clarity to your trading. You know that feeling, right? You pull up a chart and it's just this chaotic mess of candles and lines going everywhere. It's totally overwhelming and you're just sitting there thinking, where do I even begin? Well, what if I told you there's a way to cut through all that noise? There is. It's a structured step-by-step method that literally turns that confusing chart into a clear, easy-to-read story. So let's dive in and see how it works. Okay, so before we even think about looking at a chart, we got to do something super important first. You have to figure out who you are as a trader. Seriously, this one thing is going to shape everything we do from here on out. Basically, it boils down to two main types of traders. Think of it like this: are you a cheetah or an owl? The aggressive trader, that's the cheetah. They're impatient, they want action, and they're usually hunting on those faster, lower time frames, maybe grabbing 5-7 trades a week. Then you've got the conservative trader, the owl. They are super patient, just watching and waiting from the higher time frames. They might wait for days just for that one perfect setup. Knowing which one of these you are, that's the key. Alright, so you've figured out if you're a cheetah or an owl. Now it's time to actually look at the chart. And the number one rule here is simple. We always start from the top. We need that big bird's eye view to figure out where we're generally headed. So, what does that mean for us? It means we start with the daily chart. And on this chart, we're only looking for one thing. What's the big story? Is the market generally climbing up, or is it heading down? This is what we call our bias. It's like finding north on a compass before you start your journey. So how do we actually see that direction? We look for something called a market structure shift. I know, it sounds a little technical, but it's really just a fancy way of saying the market changed its mind. You know, if it's been making higher highs, and then bam, it crashes right through a previous low, that's it. That's our first big clue that the tide might be turning. And if we look at the daily chart for gold, yep, that's exactly what we're seeing. It tried to go higher, it failed, and then it smashed through that last low. So what does this tell us? The big takeaway here is that our overall bias is bearish. Plain and simple. We should be looking for reasons to sell, not buy. Okay, so we've got our North Star from the daily chart. We're bearish. Now we get to zoom in a little. Let's drop down to the 4-hour chart and see what's happening on the ground level. This is where the actual plot of our trade starts to develop. And just think about how these time frames work together. It's kind of like a calendar, right? You've got your minutes that build into hours, hours that build into days, days that build into a week. It's the same thing in trading. The little moves on the lower time frames are what create the big moves on the higher ones. We're just going down this ladder step by step to get a sharper and sharper image. Now on this 4-hour chart, we see something really interesting. It's called a liquidity void. Basically, it's what happens when price just rockets in one direction, leaving this gap in the market. The absolute best way to picture it is like a big, ugly pothole in the road. You know that eventually someone's got to come back and fill it in? Well, price is kind of the same. It often feels this need to go back and fill in that pothole to balance things out. So check this out. Even though our big picture trend is down, bearish, the 4-hour chart is telling us a completely different short-term story. It's hinting the price is probably going to pull back up for a little while to fill that pothole we just talked about. Then it will likely continue its main journey down. This is so cool because it shows you how the market can be doing two different things at the same time, all depending on your perspective. Alright, this is the moment of truth. This is where it all comes together. We've got our big picture direction, we've got our short-term story. Now we need to find exactly where to get in. And this, my friends, is where knowing if you're a cheetah or an owl becomes everything. Yup, this says it all. The path forward now splits in two, and what you do next depends completely on which type of trader you decided you were back at the beginning. So let's look at the conservative trader, the owl. They see this setup and they think, okay, my big picture view is bearish. I'm not touching anything until the price proves it's ready to sell. So they will just sit on their hands and patiently wait for the price to climb up, fill that pothole, and then they'll start looking for their sell entry. They're playing the long game, perfectly in sync with that big daily trend. But then there's the aggressive trader, the cheetah. They look at the exact same chart and think something totally different. They're thinking, hey, wait a minute. I know the price is probably going up to fill that void. Why don't I try to catch that move? For them, that little pullback isn't a waiting period. It's a whole separate trading opportunity. So what's the cheetah's game plan? Simple, they drop down to the 1 hour chart. And what are they looking for? They're looking for a mini market structure shift, but this time to the upside. They need that little confirmation that says, okay, the short-term upward move is officially on. Once they see that, it's go time. They're ready to hunt for a buy. And to really dial it in, they'll often go down one more level to the 15-minute chart. Now you might be asking, why bother? Well, it's all about one thing, managing your risk. Finding an entry on a super low time frame like this means your stop loss, your safety net, can be way tighter. That means you risk less money if you're wrong. And listen, on that 15-minute chart, they're not just clicking buy at random, no way. They are looking for very specific patterns to give them the green light. We're talking about things like a fair value gap, which is kind of like a miniature version of that big pothole we saw earlier, or maybe a mitigation block, or a bullish breaker. These are their specific triggers that say, okay, enter now. Okay, let's just zoom back out for a second. What we've just walked through, this isn't just some one-off trick. It's a whole framework. It's a repeatable system that you can use over and over again to make sense of any chart. The best way to think of it is like a funnel. You start wide at the top with the daily chart to get your general direction. Then you funnel down to the 4 hour to see the developing story. You get even narrower on the 1 hour to get your confirmation. And finally, you come out the very bottom of the funnel on the 15-minute chart with your super precise entry point. And that right there is the real magic of this. Top-down analysis takes what looks like pure chaos, just random lines on a screen, and turns it into a logical story that you can actually follow. It gives you a plan, and it gives you a reason behind every single click you make. So it all comes down to this one last question, and it's for you. You have the framework now, you have the map. The only thing left to figure out is, which trader are you going to be? Are you the patient owl, waiting for that perfect, high probability shot? Or are you the fast, nimble cheetah, ready to pounce on the moves along the way?